Hey, it's Andreas. I've been investing for over 10 years. In today's video, let's do a important update on Medical Properties Trust. I think that this quarter will be the last one where the stock will still be traded cheaply. Let's take a look at why I think this is. They just declared dividend here. And as expected, we see 8 cents a share here. It was announced on November the 21st. This dividend will be paid out to shareholders of record on December the 12th, and it will be paid in January the 9th here. So if you had the stock on December the 12th, you're gonna get this payout on January the 9th. And 8 cents a share in dividend. How does the company performance cover this? Well, let's take a quick look here in the investor relations page. We can see some of the highlights here. A net loss, but in terms of normalized funds from operation, they had 16 cents a share. 20 cents was expected, so this is a miss, all right? But about half of this normalized funds from operations is actually being paid out. If we take a look at some of the financials here, we can see that, let me actually do it from this point in terms of the cash flow. We can see that the total cash flow from operations, it's very positive, but then we see that this impairment charge here, that they have to put back, asset impairment charge, 600 million. It's not a cash flow item. It affects earnings per share. This is why I don't talk about earnings per share on property companies like this. Imagine that you're owning a property and the value of this property is going up and down a lot. One day the market thinks it's worth 2 million, the next 2.1, then when before quarterly earnings it's 1.5. Well, alright, then we have 500,000 in impairment charge loss. So the market thinks the property is worth less, but you still own the property. The tenants are still paying rents, and you don't really have to sell it today. So this is a bit of an accounting trick in that sense. That's why we look at funds from operation instead, because this is what is financing the dividend payments. So we can see here in the cash flow statement, cash dividend paid. This is in thousands of dollars. So they paid out 90 million here in total to shareholders. Quite a nice dividend payment here. Last quarter we're gonna see about the same size here once again. I just wanted to wait with this video to see this dividend being declared, because remember from the quarterly earnings reports they talked about a cap on dividend, that they can't pay out more than 8 cents a quarter until this steward situation is fully resolved. And it's not fully resolved yet. There's one last tiny holdout with some properties that's not fully resolved, but most of the hospitals in most of the states has been put into new operators, and in this case they will start to pay out rent partially in 2025. So I think that we will see funds from operations increase even further here in 2025. Of course they have sold off some properties, so they will never recover to the full glory days, but in terms of the value that we're getting now, in terms of the earnings potential per share, the dividend per share, the company is still very cheaply valued in my opinion, and I think that they easily have the potential here to increase dividends to 15 cents a share once again when they get more rent here from operators. We also see with regards to debt here, they talked a bit about it because they are paying off a lot of debt right now, as some of you might have seen from the cash flow statement. We can see in the financial information in the debt summary, what type of credit facilities, what type of debt instruments that they have that are coming up for maturity. We can see that this is about 9 billion here in debt with a weighted average rate of 4.2. And you can pause and read the maturities for yourself here. You can see a lot due 2026, some is due 2025 here. This British pound loan is one that they have been talking about in earnings reports, but we can see here that the vast majority is up for later maturity here. Sure, there is some in 2025, but they have been paying down aggressively, and that's nice to see. We can see that from the amortization part in the cash flow statement. Depreciation, amortization, 200 millions here paid down in the quarter, before that 100 million, so they're aggressively paying down debts. That's what they're using that excess capital for. It's not being paid out in dividend in this case, but they're paying down debts heavily. They have done some sale of assets. That's also reflected in the cash flow statement. So the company is clearly strengthening the balance sheet. They are clearly communicating debt maturities to us as investors, giving us an overview of interest rates on the debt, maturity when the debt is coming due, and they are being transparent in this case. So I think that once we get these new operators to start paying partial rents in the next year, well, then we will potentially see an increase here in dividend once again, and a greater yield, a more safe yield, hopefully, no more issues with any tenants, and then it's going to be smooth sailing for us as investors going forward with a nice recovery in this case. Clearly the potential to at least 2x to about $8 something in 2025 for this stock with current yields, especially if they double the yield here once again at about 14%, then it's going to be to the current share price, and that's not going to be sustainable in the long run. There's no way the stock is going to be traded that cheaply if they're able to pay that sort of dividend going forward. So hopefully we can just put this steward situation firmly behind us and have all of the hospitals turned over into new operators. Very, very interesting company. It has taken a lot longer time than I expected for all of these deals to finally be over. It reminds me a lot about other companies that I invested in, where these procedures took a lot longer than expected. So once again, a big test of patience for investors to just sit and wait for these deals to be done. But hopefully we're gonna get a big reward here at the end of it. Alright, that's been it for this video, covering the dividend declared, 8 cents a share, normalized funds from operations, in this case 16 cents a share. We're seeing the debt, we're seeing the amortization, and I think once again that this will be the last quarter where the stock will still be this cheap. I think that once we get more rent from the new operators, then price will increase here in 2025. Am I right? Only time will tell, but hopefully we get a nice payout as investors. That's been it for this video. Take care now. Bye bye.